Okay, I think I have most of all the data. All right, so the large swings that I would use would be these swings here that I'm going to label. You know, the major lows to highs. You know, some of them that I showed you on the chart before where I did those time counts. And, you know, you could run some of that analysis for some of the bigger picture turns here. There's also this little, I think we would run this. This is a little bit questionable. Nah, that low to high swing is not really too special. So I'm actually going to put the lines up so you can see what I'm talking about, you know, as far as major swings. Why does it work is a good question, but you know, I like looking at those things like the nautilus shells and, you know, the other things in nature. And I'll just tell you one cartoon, or share one cartoon that you should get if you've never seen it. It's called Donald in Mathmagic Land, written by, you know, Walt Disney. And it's this amazing cartoon with Donald Duck in Mathmagic Land. He's hanging out with Plato and Pythagoras, and he's talking about the Fibonacci ratios in nature, you know, and how they show up all over the place. And if they show up in nature, I'm assuming that they also show up in human nature and psychology, and somehow that turns the market. I mean, I really don't know how to explain it all that well, but there was the ending line with the cartoon was, I think, a quote from Galileo, which said, mathematics is the alphabet in which God has written the universe. And I believe that, you know, but you don't have to believe that to use this work. You can test it for yourself and see if it works for you. Okay, I just wanted to give you an idea of like some of the larger swings that you might use for, you know, bigger picture analysis, okay? But I think what's most important to us now at this point is, you know, when's the next high in the S&P? Is this market going to roll over or not? What do you need to protect yourself against, right? So I want to use some of the closer swings to accomplish that. And first I'm going to do it with the timelines, and then I'm going to do it with the histogram. So here, let's look at some of these larger swings. Let's look at the low to low and see if we're near anything. And let's see, we've got one date coming up, June 16th. What is Monday? Monday's the 15th, correct? Yeah. Let's see about a low to low or a high to low swing. So I'm going to take the two-pointed tool, measure the high to the low. Okay, there is one cycle, June 10th, but we've just gone beyond that. Well, that's in that one grouping. Okay. Now, I'm not really going to use these swings back here. Okay, I know that we've rallied for more than 44 trading days now off of this March 6th low. But how about, let's see if there's anything with this August 11th high to high, and then we're going to focus down into the smaller swings. Yeah, no, there's nothing. We've passed most of those cycles, and the next one is not even on this chart. Okay, so get rid of that. Now let's dissect this a bit further. Let's look at some of the smaller swings, or the swings within the swings. and I'm going to mark off ones that I think it's worth looking at. This low to high, low to high, and this low. All right, let's compare these first. I just want to mark them so I can see. This will pretty much show the same thing that I have in the S&P. Okay, 14 trading day rally, a 13 trading day rally. Was it this high or the other one? 12 trading day rally. And then this low, May 15th to, actually when we hit June 5th, that's when we were 14 trading days. That's when we had some time symmetry. But we have gone beyond that at this point because the most recent high has been made on June 11th. Okay, so what are we going to look at? How about the closest prior high to high swing? So I'm going to measure the April 17th high to the May 7th high. Okay, there's a 1618 cycle. Now we are slightly past it, but because the recent high was made on the 11th, I'm going to keep showing you these cycles so that you know that this is a key and pivotal high due to, timing. Okay, and let's see, so I did a high to high. Let's do the low to the low. So I'm going to measure from 2 points the April 21st low, and then go to the May 15th low. Okay, so there's the June 11th. Now, again, the most recent high has been made on June 11th, and there was timing there. As I go through this chart, you'll see that we definitely had timing there. But if we take it out, because this market is still definitely bullish, you're still looking at a nice pattern of higher highs and higher lows, and the bullish symmetry is intact. Bullish pattern, bullish symmetry. So if we make a new high, that's when we'll start looking to the next dates, which so far come in at June 16th and June 18th. Okay, now let's compare. We can compare the swings in the same direction. Now I already know that this one has already gone beyond 14 bars, but we can run let's see, I'm going to run the April 21st low to the May 7th high, project from the May 15th low. Okay, we've already gone through this. There's a 1618 alternate time projection. If the market is rallying into the grouping of time cycles, you would look for a high and reversal back down. This market was rallying into the June 10th, 12th time window, and we started watching for a possible reversal. Now, we did get some sell setups, but really no follow through to the downside. So right now, if we came through this last high that was made on June 11th, you have to start looking at the next timing cycles for the next possible high if it's continuing higher. I'm not going to run time cycles for a low until the market shifts direction. So let's see what else we can do. A high to high, a low to low. Alternate time projection, and the high to low I believe we're already beyond, because we'd be taking, let's say that, actually is this the high or is this the high? Let me double check. 929.58 versus, actually May 8th is the high. So let me change this. That only changes it by one trading day here. Yeah. Also, there's one thing. When I'm running these timing cycles, I'm doing trading day projections. But when I get into the histogram, it's actually going to be, the program shifts it into calendar days. I believe that trading day projections are more accurate, but the calendar days, they might be 1 or 2 days different than what you're seeing as far as these projections. Now, the question could be which ones are more valid. Well, again, I lean towards doing the ones by hand in trading days would tend to be more accurate, but I still like to consider both and like to run both. An alternate time projection is comparing a swing in the same direction. So in this case, I did one where I took the April 21st low. Let me see if I can. I'm not seeing a pointer here. Where you can take the April 21st low to the May 8th high, and then and here I'm going to change this one because it was May 8th, not May 7th. So April 21st low to the May 8th high, and then project from the May 15th low. So that's the alternate time projection from 3 points, comparing these swings in the same direction. So comparing the length of April 21st to May 8th with the length of May 15th to, wherever it's currently going. Sunday is not a trading day. I don't include that. It is a good question, though, because with Globex trading, sometimes there are cases where the program might recognize Sunday as a trading day, but that's a new problem. But typically it's just, Monday through Friday. Okay, so let's see. We've got, again, here's where we had cycles at this last high, June 10th, June 12th, June 11th, June 10th. And if we surpass that high, the next time window for a high, so far I'm not getting anything major except the 16th through the 18th. So let's see. Are there any intervening cycles that we want to look at? Let's try the April 21st low to May 15th low, projected from the intervening high. Now notice there was a 1272 that came in. Here, actually, I'm going to draw that for you so you know where I did that from. Okay, so I did the April 21st low, the May 15th low, and then I projected forward from the May 8th high, the intervening high, okay? Whoops. The trend line's not showing up here. This high, there we go. Right, so we're comparing those swings. And you notice that 1272 was June 11th. But that also gives us another date for the next grouping of cycles, June 16th through 19th. So if we take out this last timing high that was made on June 11th, the next time window for a possible high comes in the 16th through the 19th. And then let's also run the histogram. And I think I'm going to need to, okay, I'm going to load the primary swing file. Where's the S&P cash? Okay. Now, what you actually have to do when you run a histogram is you have to tell the program which highs and lows you want it to use for the timing projections. And then after that, you're going to place the marker of the program on the last low or high that you want to project forward from. Now, since the market is trading higher, or has been trading higher from that last low, what I want to do is run the projection from the May 15th low for the possible highs, and that's where I'm going to click on Reports, Dynamic Time Projection, and then I want to make a new report, and then the program actually switches it to calendar day mode, and I want to run it to, pretty much current time, so where I want to start the projection bars. This is where you move the projection bars past. Okay, I'm going to start it 16 bars forward so that we can see those other cycles, or the cycles that we're on top of right here. We'll see what the histogram looks like. So click on Table and Histogram, and then it shows you here, it actually shows you the cycles. You're going to see down below, where it says target date, it actually tells you the ratio and the cycle and what it's projected from. And the standout bar here, as far as the timing on the histogram, if you come over to the right of this little chart here, you can go and look and see where it stands out. And it looks like 11th, 12th. Well, even maybe 11th, 13th. Okay? So if you want to know the actual cycles, you can look at the bottom and it tells you. And then you click on Save Histogram below the chart. I'm going to name it High SPX because I'm looking for a high in the SPX. I projected from the last low. And then here's where the histogram shows up. So this shows where the timing cycles came in. Now, if we surpass this next high, or this last high made on June 11th, you will run the timing projections again. Oh, okay. Let me show you what I did here. Okay, because I guess some of you do have Dynamic Trader. Okay. Now, there are some defaults in the program, usually over here, but I don't use them. I made my own cycle ratio sets. I do not use trading day counts, so I switch it from the default to none. I do not use the calendar day counts, so I switch it from the default to none. I only like to use, the time ratios here. And then what I did, to show you what's in here, you click on Time Cycle Ratio Sets. This is what is in, the one that I built, and anybody who is interested, or anybody who has attended today, is welcome to have my file, which is called CB New. That's just what I named it because I just wanted to do something different than what Bob already had in the program. And I put in the distribution that I thought was important, with the ratios. I put a little bit higher weighting towards 100% and 1.618 and 618. And then by, adjusting it the way that I like to use it, and as far as what I think is more important, that's how I come up with these histograms. You can use the default if you want, or you can use mine, and you're going to need to email me directly. And it's only good for the the people that are in the seminar. It's available to them. So I'll give you. This is my email. If you have Dynamic Trader, email me and I will send it back to you. Okay, so that's what I have in mind. Now, let's see, close this. You can use the, you can use the default if you wanted to, or if, let's say, you're using smaller swings, you might want to just use 618, 100%, and 1618, and just play around with that. See what works for you. Sorry. Okay, but normally what I use every day in the chat room is the CB new, and I don't know, there might be a better way for me to post it, Priyanka, thank you. If you can think of a better way for me to post it, because if everybody emails me for the file, I might be in deep trouble. So let me know if there's a better way to do that. Okay, but that's how I set up the histogram. But let's show an example. If, let's say that we make a new high in the next few days. Now, for some reason, this, the way that this stuff is weighted, it's a little bit funky. You really need to run the time projections from where you're currently at. Yeah, I don't know how to upload a file into this room. I'm not sure if that's possible. If it is, Priyanka, let me know, and I can do that after I shut down the program. I can definitely do that. Okay, but let's run the histogram again. Let's make the assumption that we're going to take out the high made on the 11th. So let's go past the 11. Let's go to current time. Actually, I usually like to put it one day before, because okay, all right. All right, well, you know what? I know that it's only good for the dynamic trader. So anybody who has the dynamic trader that is here, email me directly, and I will give it to you. If I try and define the swing sets for the histograms, that's going to take up the rest of the time, and there are not that many people that have DT. I could probably do that for, maybe we can set up a half an hour. It will have to be like maybe another next weekend or something, and I can go over that separately for DT owners. But yeah, this formula is only good if you have the dynamic trader program. So why don't we do that, and let's just move on to what would come next as far as timing cycles. Yeah, there's actually a link on my website. If you get it through my website, I give you an hour. I work with you for an hour on the program just to get you started. Okay, here I just ran time cycles, making the assumption that we're going to make a new high, and then I'm going to save the histogram below the chart and see what that says. So let's see how it looks. This next histogram also, well, actually, here's the standout bar on the 15th. There's another one here right around the 19th. That kind of overlaps those cycles that I did by hand. Bottom line, if the market is making a new high and you see this histogram underneath the chart, you definitely want to watch for a possible reversal. You'd want to tighten up your stops. You don't need to get out of a position, because sometimes the market will blow through time resistance the same way that it blows through price resistance. Okay? So we know what we're dealing with here in the S&P. We've got the high or pivotal high in place with the timing. And if that's taken out, we know that the next time window is actually early next week, where we're still going to have to watch, the histogram and this resistance around the 16th through the 19th. in time. All right, somebody throw out a market that I might have data for, and we can look at it. Okay, I'm going to give you my address one more time. Let me look at crude. Crude's definitely a hot market, so let's take a peek at that one. I don't have any real alternative to a whatchamacallit. Like, I don't have a crude cash chart, so what I'm going to do is use the continuous and hope that it's not too messed up. Now, one of the main swings that I would want to look at, now since the crude is straight up and I feel tortured every time I go to the gas station, I'd like to measure the time of this whole major high to low swing. So let's take the high to the low and see if there's any cycles. Okay, 786. Let's take a swing within that swing of high to a low. Pretty interesting, huh? Okay, I cheated. I did this work a couple days ago. I knew that we had something coming up here. Okay, so far, you have June 12th, a 1272 extension in time, and you have a 786 of the larger swing. How about, let me try this other smaller swing in here. I'm going to show you what I'm looking at. Let's see if there's anything with this high to the low. There's nothing that currently overlaps. But do you see how when you go out into the future, you have three now that are setting up right around July 21st, 23rd? Okay, so let's get rid of this for now. All right, let's zero in a little bit closer. So what does what mean? That we're having the cluster that's going out on the 21st, 23rd? I just like that there's an interesting confluence where they're starting to come together forward. That's if we don't, like that would be a time window that we would look at if, you know, if we don't find one before that tops the market. Yeah. I mean, right now, running these timing cycles, we're looking for, you know, possible top. So let's look at the highs and lows that might be important now as far as the analysis and timing. And these are pretty much the swings that I want to work with. I'm going to be taking, let's see, I can run a high to a high. I can run a low to a low. I can run, I'm pretty sure we've gone way beyond this high to low swing, but I'll run it anyway. You can run this low to high swing and then project it from the new low. And then we have a couple of smaller swings we can look at and compare. Okay, so let's do that. So first I'm going to use from 2 points, I measure a high, January 26th high to April 9th high. Sorry, March 26th high. And you see where we now have June 11th, 1272. Okay, let's do another high to high swing. So we're going to do the March 26th high to the May 12th high. And there's 618, June 10th. Okay. Then let's do a low to low swing. Oops, from 2 points, I'm going to do the February 12th low to the April 20th low. Well, there's a 786 June 9th. Let's take a look at some alternate time projections from 3 points. So this is where I'm going to compare the swings up and see if they're similar. Like this low to high swing, this is 29 trading bars. This rally was 16. I'm also going to do the one from the January 15th low. So let's look at that first. I'm taking the 3-pointed tool. I'm measuring the January 15th low to March 26th high. You can see those as some pretty important highs and lows there. And then project from the April 20th low. Well, that one comes out at June 26th. So that it doesn't overlap this time period. But let's see about these smaller swings in time. Well, if you measure this Feb 12th low, March 26th high, from the April 20th low, we have a June 11th comes up, and also June 25th in the future. And then let's look at the smaller swings. A April 20th low to the May 12th high, projected from, let's see, this next low. Not sure which is the low, May 15th. Or this one. Okay. All right, so now do you see where we have a confluence of timing cycles that we're pretty much right on top of right here? Since the market is trading higher into the time window, we'd be looking for a possible high. Now, does that mean that you're supposed to go in there and short everything every time you see a, 89 tick chart go red? No, it's dangerous. But if we start taking out some key daily support and prior swing lows, or at least break a bullish symmetry that's on the 15-minute chart, yeah, then you can, day trade it from the short side if it sets up as a sale, where you shift into a pattern of lower lows and lower highs using these cycles along with, maybe the price work that you would also do. Okay? Now, somebody's asking me a question is, do I give more power to my price clusters or time clusters? I pretty much, I think the price work is extremely important because it defines the setups. But I also give the timing work a lot of power, especially when you have a very healthy confluence. But as far as making a decision, you have to see things come together, like time and price coming together. And some of the examples that, like I've shown on Twitter, you're welcome to go check that out. Twitter doesn't cost anything, and I've posted tons of charts in the last, 6 weeks or so. And you'll see some of them labeled time and price. Okay, when time and price comes together, those are probably the highest probability trade setups, and then you go to a lower time frame and look for a trigger. But what we've done right here and what you can recreate is we have one time window where we should watch for a possible high or it's saying that the odds for a reversal are higher than usual because of the confluence of cycles that are coming together. Does that mean it's definitely going to put in a major high in the crude? No, absolutely not. Does that mean that you should watch it if you're long and need to protect yourself? Yes. Should you watch it if you're, a day trader and you want to try and time a reversal? Yes, but also wait for the pattern to shift. Don't step in front of the freight train. There's the Twitter link is right on my website. Does everybody have my website? Yeah, there is if you're using eSignal, there is a separate feed to use the feed, but there are some other feeds that you can use, but you need to contact them. I know you can use some TradeStation data if you want to. I use eSignal. Okay, question about between a daily and a weekly chart. I honestly don't. I don't know how well I can trust the weekly timing, because typically you want to use the exact highs and lows within those weekly charts. Well, I don't know what, as far as Thinkorswim is concerned, I have no idea what is contained within that program, so I can't tell you. You would need to ask Thinkorswim, what kind of tools they have. But my website is there is a way that you can use TradeStation data, but again, you need to call Dynamic Trader or email them, because I'm not really sure. I know that there are people who use it, and it's doable. Some people use Genesis data. It depends on what type of analysis you're doing, whether it's intraday or just end of day. Okay, so here we know, yeah, for all I know, Thinkorswim might have all the tools that you need, but I have no idea because I don't use it and don't really plan on it. Okay, so what do we got going now? So we have two time windows that you really want to focus on for possible high in the crude oil, and they come in on June, the June 9th through the 12th, and then the next grouping comes in, looks like the 23rd through the 26th. So if I was writing a report, I would be saying that, the two time windows that stand out in the month of June for a possible high come in the 9th through the 12th and the 23rd through the 26th, and that I would be watching those time windows for a possible intermediate high, but not acting on it unless you see reversal indications. Because I know that there are people who have watched these timings work more often than not, and you can't make the assumption that it's going to reverse. We had about 2 or 3 time windows that were blown through in the euro. I'm going to use the old contract in the euro, and then we had a huge time cluster which came in right around June 2nd to June 3rd, and then we finally had this decline from 143.38 to 138 area. Okay. Just give me 1 second here. Okay, sorry about that. Somebody showed up at my door, I think. But anyway, let's see. I want to see if I can answer some questions. I will, if you have Dynamic Trader and you had a couple of the questions, that you're asking about the histogram, I'll set up a date for you guys. Oh, okay. I'll give Priyanka the mic for a minute, but I'm also willing to do an extra half an hour for just my DT people, and I'm gonna give her the mic.